So looking at E12 on page 168 into 169, we're going to prepare the year-end adjusting entries for the following transactions. If office supplies had a balance of 168 on January 1st, purchases debited to office supplies during the year of 830 and a year-end inventory revealed supplies of 570, what should be my adjusting entry? So if we're doing the math here, we had a beginning balance of 168. We purchased, how much did we purchase? 830. So that's what, 998? And then at the end of the year, we had 750. Oops. We had 570. Sorry. So what does that 428 equal? What is that? What does that represent, Ryan?
No, I wasn't paying attention, sorry.
So come up to speed for me.
Office supplies expense.
Thank you, Nikki. So these are my supplies that I'm going to expense for the period, $428. So my debit is going to be to office expense or office supplies expense. And my credit's going to be to what? Office supplies, my asset. So I'm showing that I used up $428 of my supplies during the year. Let's look at number 2. Depreciation of office equipment is estimated to be $1,065 for the year. So what am I going to debit? What am I going to credit?
Debit accumulated depreciation.
Am I debiting accumulated depreciation or crediting it?
Debit office credit.
Say what?
You're crediting accumulated depreciation. And
Right.
You're debiting the depreciation expense.
Good. I'm debiting depreciation expense to show that I'm depreciating that amount in the year. And then I'm crediting accumulated depreciation for the office equipment for the same amount. The third one, property taxes for 6 months are estimated at $900. Estimated at $900 have accrued but have not been recorded. Property taxes for 6 months are estimated at $900 have accrued but not yet been recorded. So what do I have to debit? What do I have to credit? What do you think? Let me see. Michael Ravalli, what am I debiting?
I honestly don't know.
Okay, so try to think about it. So property taxes for 6 months.
Oh, is it prepaid?
Property taxes for 6 months have accrued but not been recorded.
Approved property taxes?
Property taxes payable?
Well, yes, but what am I debiting?
Property tax
Expense.
expense.
Property tax expense, right. Remember, whenever you're doing these adjusting entries, you're going to have one income statement account and one balance sheet account. So I'm going to property tax expense to because I have, so this, what type of transaction is this? Accrual or deferral? Accrual, right? Because I have not recorded anything, so I have to bring my books up to snuff, and I'm going to record my property tax expense and my property tax payable. No cash has changed hands. So for that $900. Now, again, I'm going to ask you the overstated, understated. Let's look at this one. Office supplies expense and office expense. Before I do this adjusting entry, is my assets overstated or understated? Overstated. See, before this, I should have expensed $428. So my assets are overstated until I actually do this adjusting entry. What about this one? Are my assets overstated or understated before I do this adjusting it? Overstated, right, until I do this adjusting entry. This one, are my assets overstated or understated or neither? Neither. Doesn't affect my assets here. Okay? Let's do the next one. Unrecorded interest receivable on U.S. government bonds, $425. Two accounts, one's a balance sheet, one's an income statement. So unrecorded interest receivable. Okay, I'm going to record interest receivable. I'm going to debit my interest receivable. Okay. For the amount of $425.
Are you not debiting unearned interest?
Did I earn this? If it's a receivable, did I earn it?
No.
Yes. Yes. Anytime you have a receivable, you've earned it. All right, I'm squeaking. Yes, I'm squeaking over there. Yes, anytime you have a receivable, that means somebody owes you something. That means you've earned something. Somebody can only owe you something if you've earned it. Okay? So interest receivable. So therefore, if I've earned something, what do you think I might have earned? Income, interest income. For $425. So before I record this transaction, are my assets understated or overstated? Under. Good. Excellent. Right. Understated. Because I earned income, but I didn't have it recorded yet. So my assets are understated. Okay. Fifth one. Unearned revenue has a balance of $900. Services for $375 were received in advance and have now been performed. What am I debiting? Good. Unearned revenue. And what am I crediting? Service revenue. And for how much? $375, right. This one we didn't have to calculate anything because they told us. You got to pay attention to how the questions are worded because this one they were telling you what was actually earned. Okay, services totaling $400 have been performed. The customer has not yet been billed. So you performed a service. Did I earn it or didn't I?
Yeah.
You've earned it because you performed it. So we know that we're going to have to credit service revenue. And good. Excellent. Accounts receivable. And for how much? We said $400. $400. Okay? So in this one, are my assets understated or overstated or neither? Before this one. Before the receivable. Understated. How about up here? Understated, overstated, or neither? Neither. Good. Whoever said neither. Very good. Okay, it's not affecting my assets here. Okay. What's the question?